Hello guys, I hope you're doing well. So we're back with another lesson. We're going to be focusing more on the technical part of the analysis. In Forex, the basic analysis, we have the fundamental analysis and we have the technical analysis, and then there are those traders who choose to trade using indicators. So for us right now, we're going to be focusing on the technical analysis of the technical part of the analysis when it comes to Forex. So the first thing we're going to start with is the market structure. Okay. So when it comes to market structure, what do I mean when I say market structures? Okay. So uh, I'm going to go to open my MT4. So in the market, we have two types of structure. We have four types of structures. But the three major types of trends or the market structures are: first one is the uptrend. When you look at this chart, you can observe that this market is moving in a direction that is upwards. That is what we call the uptrend. I hope this makes sense. So then we have okay, this is also, let me try and find something out of this. So we also have this. This is a, what do I call it? This is a consolidated market. By consolidated market, I mean, I hope you guys are able to see this. From this point to this point, from this point around this zone, the market is not moving upwards, is not moving downwards, but in a sideways manner. Okay, so that is what we call a consolidated market. So we also have a ranging market. A ranging market will also be moving sideways, but when it comes to the ranging market, you cannot trade it because you can look at this. We have specific points where the market is moving to before it's turning down, before it's turning, going hitting the previous point or slightly above or slightly below before continuing. I hope you see this. So this is basically what we call a consolidated market. And you can see before we had the consolidated market, we had a downtrend. Okay, so basically a downtrend is where you find the market moving downwards. Okay, this is not the perfect. Let's look for something. Okay, we have this. So you can see you can see the market from this point to this point. The market is moving in a downward direction. So that is what we call a downtrend. Let me show you. From this point downwards. So this is basically what we call a downtrend. Okay. So when it comes to the types of trends, there's various things we're going to look at. For us to call something a downtrend, for us to call something an uptrend, we need to have the structure forming certain things, and that is forming new highs, new lows. I hope that makes sense. So we're going to refer to our book from the Telegram group, the Trading Bible. So we're going to be looking at the Trading Bible. This is it. When it comes to the market structure, we have the trending markets. For an uptrend, this is an uptrend. You need the market to form a higher high, a higher low, higher high, another higher low. So basically what this means is when you look at this higher high, it's higher than the previous higher. Then we have the higher low. This is basically to mean that it's high, it's going on a higher point, it's higher than the previous low, and it's a lower to this point. You can look at this. This is higher than this. The new higher high is higher than the previous higher high, but it's lower than the previous higher low. Then you look at the higher low and you see it's higher than the previous higher low. So that is how you determine whether the market is moving in an uptrend. So then we have the downtrend. You determine the downtrend by same case, but now you'll be forming lower highs and lower lows. You don't need to have all this mastered, but you need to understand how the market structure will form. Because when it comes to the Forex market, the market just doesn't move in just a certain direction. The market will move in a tunnel. The market will move in a certain trend. It's like a river. A river does not just flow in a certain line. There's that channel that will follow. Okay, so basically that is the forex markets. Okay, so you can find these notes in your trading book, trading bible, page 51 and yeah, roughly page 51. Okay, so you can see when dealing with the trends in the market, they don't just move in a certain direction, they move in a certain trend, they move in a channel. Okay, so when we say the uptrend, this is what we call the uptrend. Okay, hope this is clear, guys. You see, yeah. Let's look at another image. We have this. So you see, so do not mind about the lines. These are lines that we usually draw, lines that we call the trend lines, the supports and the resistance, that will help us determine what the trend in the market is. Okay, so when it comes to the downtrend, just a minute, this is the downtrend. I hope you guys see this. I hope it's so clear to you guys. I hope you get what I'm trying to say. Here we can have another image, just a few minutes. You can see what I'm trying to say. So when it comes to the ranging market and the consolidated market, these two markets, most of the people will not give you a big difference, but you need to understand that when it comes to the ranging market, it is not tradable. This is not a good example of a ranging market, because you can see the points that the market is bouncing off from. See these points. So basically, say this is a more of a consolidated market rather than saying it's a ranging market. A ranging market is not tradable. It's moving in a sideways direction, but is not in any way bouncing off from any supports or from any resistance. Okay, yeah. So you can see they don't have any clear. They don't give you that clarity. They don't differentiate. Okay, you can see this. This is a sideways market, so we can call it a consolidated market. Okay, so let's go back to our chart and try and find the trends in the market. Okay, so we have this is USD JPY on the 4 hours. It's so clear where the market is going. You remember, guys, yesterday when we were talking about the market moving on a higher to a higher point. Hope you see, this was us yesterday. The market moved a few pips up. Okay, so how do you calculate pips? Just a pointer, just by the way. So if we entered the market from this point and the market moved to a higher location, this is basically how you do it. Okay, that is how you tell the number of pips and the number of candlesticks that market moved. I'll give you more information about this later on. Okay, so but you can see this is an uptrend. You see, hope you see what I'm trying to show you guys. So the market is moving in upward direction. Yeah, so let's look at the USD chart. This is the 4-hour time frame. Okay, so in the 4-hour, I'd say that on a bigger picture, the market is moving in a downtrend, but recently you can see that the market started forming a consolidated market. Hope you see this point. See this zone, around this zone. Yeah, so yeah, that is one. Then let us look at the Euro USD. This is the daily chart. We're not going to be looking at the daily chart because the daily chart, okay, we can also do that, but you can see from the daily chart, the trend is basically a downtrend. See, what I did is just I zoomed out, okay, to give me a clear, it's the daily chart. I zoomed out to give me a clear picture of what the market is doing. Okay, so we have that, but it's not the best if you're going to be day trading. You're not going to get the best entries if you're going to enter the market with the daily time frame. Okay, so when we go to the 4 hours, we can see we have some sort of a downtrend. Let me just zoom in. So you can see we have some sort of a downtrend. See this? Yes. So when we have that, we can call it a downtrend. Okay, well, let's try and find some uptrend. I don't know if we're going to find any, but yeah, Okay, this is another currency. This is GBP USD. I think we can call this a ranging market because let me show you. We have this point, okay, then we have another point on top here. We have another point around this zone. Sorry, we have this point. Okay, so you can see the market is not so clear on where the market is hitting. It's not so clear on where the points are that you're supposed to be trading. Hope this is clear, guys. See the cross, then another higher high, another higher high. It's not going to a point you're expecting. Hope you see this. So this is basically a ranging market. It's not so clear on what is going on. It's not so clear on where the market is going to go next. It's not so clear on what the next move should be. Okay, yeah, so since we will be just looking into these four charts for now during our studies, so you now understand the difference between uptrends, a downtrend, a ranging market, and a consolidated market. Most of the people won't give you the difference between ranging and consolidated market, but it's very important for you to understand the difference. Okay, so yeah, that will be all for now. In the next lesson, we're going to be talking about supports, resistance, trend lines, supply and demand zones. So basically, that will be what will be more focusing on how to determine these trends. So I hope you had a good time. I hope to see you in the next one. Thank you.